Good morning, everybody. Hope your evening went well. It was really nice here in Wichita. The cool front started making its way through, and we were like 80 degrees on the deck last night. And this morning I awakened, started off at 57. We're down to 54. So Reg has been generous and shared some of his cooler air with us for sure. The storms missed us. They went south and east. But moisture-wise, we're in good shape for the corn and bean crops. And so life's going to be pretty good here for 3 or 4 days. Supposed to be back in the 90s next week, which one would expect this time of year. But we're having a relatively cool summer. Wichita can, not as bad as Texas in the summer, but we can have, I think we had 46, 47 days of over 100 degrees a couple of summers ago. So if the wind's from the south, it's hot. If the wind's from Reg's neck of the woods, it's a bit cooler. Okay, we have a lot of news today to get through. Last night, everything was down except for gold. Gold came back up and is trying resistance in the 13.10-15 area, as we suspected it might. Usually when you get a hard break in gold or crude the next day, overnight will rebound a little bit as they search for resistance, and that's what happened. Everything else is lower though, so that actually came in and supported our financials. The news this morning: retail sales is expected up 0.6, ex-auto up 0.6, Empire Manufacturing been carrying about 13 for most of the week. It's 17.8 this morning, so that's had a big jump. Export prices plus 0.2, import prices plus 0.4. Business inventories plus 0.6, but no one will pay any attention to that. So after the retail sales news is out of the way, the Empire index news will be lost with the retail sales numbers. Then the focus will shift to Yellen's speech, and I don't think she's going to change anything. It'll be steady as she goes. The supposition, the guessing, the flurry of commentary post Yellen's testimony will be, when will the Fed raise interest rates? And people have moved that out of 2016 into 2015 now. And there's a couple of hawks on the Fed, as Fed governors, that are talking about that needs to be raised sooner rather than later. So these are trial balloons that are being floated. Draghi came out overnight in his speech yesterday and said that the carry trade in Europe, based on low interest rates, is going to be much less lucrative than it has been in the past. I don't see how it can be if the interest rate from the European Central Bank is 15 basis points. Seems to me it opens up a lot of opportunity. And Draghi said starting in 2016 out to 2018, banks will be punished for not increasing their lending to businesses and homeowners. Now, not home loans, but consumer lending. So banks only lend on assets. Banks don't lend on cash flow projections. And if you don't have assets that warrant a loan from the bank, you're not going to get it. And that's the problem about trying to pump an economy through the banks as opposed to entrepreneurs, venture capital, etc. So Draghi's got his work cut out for him, for sure. Okay, we left yesterday's market wanting to sell the 5 area to 7. We're fairly aggressive on that, and so this morning I put the sell basically at 5 to 9, and then 13 to 17, kind of where we were yesterday's morning. On the buy side, we're going to be where we were yesterday morning also, 29 to 01. And then 25 to 21. And I think the news can take us down a little bit. I think Yellen's testimony will probably stabilize things. So I basically see a trading range. Support in the 28 area to the buck, and resistance 8 to 12, and we'll play for that today. And we got volume right up here at what, 7? That'll attract us, and then volume at 12. So this should be our resistance area, and we should have really good support down here, 20 to 24, or in this 28 area, 28 to 30. And that's the way we'll play it this morning. Okay, taking a look at the 30-year, the knob spread basically was unchanged overnight, up a half a tick. Not a lot going on. But again, it shows that the long-term interest play is for lower interest rates. The yield curve is flattened. Now that doesn't guarantee a recession, but it's a harbinger of such. Doesn't work all the time, but if you wanted to bet on the fundamentals, you'd bet on the financial and currency players. You wouldn't bet on the equity players. Different rationale, different dynamics drive it. So we wanted 25s, 29 last night. That looks reasonable still. Then 17 to 21. And then on the sell side, yesterday's high was 11, so we'll make it 7 to 11. Give it a little more room because of the knob spread than we will the 10-year. And then 15 to 19. Let's see, 25, 29. Sorry for that dead air there. See, Roger is lit up my screen right here. See what Roger wants. Roger, we talked about the knob spread a lot last week. We'll do it again. It's a great trade. It's there for you every day. I talk about the knob spread every day. You go to your broker and you ask. They usually have a page for order entry set up on a spread basis, and you're long the 30-year, short the 10-year into the auction that Monday or Tuesday morning, and usually it's safe on that Friday afternoon or Monday morning post auction to get short. You buy the 10-year and you sell the 30-year. There's not a lot more I can say about it. So what you need to do is go to your broker and go to his ask to see the order entry page for spreads, and it'll allow you to put your bid out there. You can buy the spread at whatever you want to buy it at, or you can sell it at whatever you want to sell it at, or you can do it at the market. And their order entry stuff should automatically place that order for you when you can buy or sell at the market, and it meets your spread parameters. I don't know if there's much more to say about it than that. I mean, I talk about it every day. I don't buy my spreads at the market. I put a price in, and I usually give them 1/2 of 1 tick to the bid side, or 1 tick to the sell side, depending on what I'm doing. But if you go at the market, you'll end up losing a 30-second on each side of it. So you lose 2 30-seconds, which I don't like to do. But the order entry is a little bit different at every brokerage firm, their pages. But what you want to do is you want to go to a spread page and you want to buy which one you're buying. You're going to sell the other one, and you want to be able to lock in a price. Okay, gold. We said the 10 to 15 area was resistance. Yesterday we had a 10 to 12 sell. Made it up to 14. We have this spill. From 16, we have this low over here at 18. Have an overnight high of 14, so maybe a little higher. 14 to 16 will be sell 1. And then we got the 18 to 20 will be sell 2. I still see buying breaks as the trade, especially after what happened yesterday. I mean, they knocked the daylights out of that contract. And overnight, round the globe, gold ETFs were bought on the stock side as well as the physical metal. So the retail account, because of political instability, political malfeasance, really, the way these governments, all 20 of them, the central banks of the 20 major powers out there, they're all printing money. It's just not going to change. That makes the United States the least bad choice. It's just like in the mortgage backs. I mean, we saw the mortgage back market going to explode well before it was going to. And the game is not to be the last one left standing. And I don't think that's going to change. So right now, everybody kind of shrugs their shoulders and they said, well, we've been successful playing this game for a long time, and the game has not changed. We're going to keep playing it. And one thing that people really don't appreciate about large institutions, they have arrived at whatever position they're at based on strategies that have produced returns for their investors. And until they no longer produce returns for their investors, they don't change anything. And you sit there, well, they should be aware of this or that and the rest of it. Yeah, they should, or they could be aware of it, and they probably are. But their whatever their investment philosophy was is what has brought them profits. Okay, we left yesterday wanting to buy basically the 36.10 area. Then we had 85 to 95 right down here, and it was hit. So our buy number 2 held, so we'll make that buy number 1 on the euro, and then buy number 2 will be 65.75. Our sell was 40 to 50. We are pointed higher right now, so we're going to start off with a sell at 40 to 50. And why? I mean, we got a 136 minus and a 136.50 plus market. And this damn thing moves so slowly during the day. If you don't take it at your price, it's real easy to find yourself underwater in a hurry. So you just don't fight Mother Nature, so to speak. Okay, crude oil, pretty close to unchanged. Didn't do a lot last night. If my early morning look, my memory of it still correct. Wrong. Okay, it sold. So we left wanting to sell 101.25s to 50s. We thought it could go a little bit higher, and it didn't. And on the buy side, we had 25 to 50 and then 75 to 100. So we're going to keep our 75 to 100. On the buy side, I put a chart up this morning, and it is significant. The economic second largest input is the cost of energy, and it really is cheap energy that makes for robust, strong economic growth. And crude oil prices are as expensive as they have been since the discovery of oil in Pennsylvania. They're the highest they've been in 150 years. And that also serves as a brake on the economy. That's countered by cheap money, but what you have is that nobody's really aggressively pursuing economic growth and building factories and plants right now. It's really, really amazing, and we saw this in the 30s with fascism. And the businessman's preferred model is not, if you're at the top of the pyramid, is not capitalism. It takes capitalism to get to the top of the pyramid, but once you're there, as a major corporation any place in the world, it's a hell of a lot easier to get the politicians to regulate your competition than it is to go out and innovate, bring new products online. So businesses are perfectly happy if they're at the top of the heap with fascism, a fascistic approach to the economy and to governing for that matter, which you'd have to have. So they don't fight it at all. And it's the age-old battle. The cash cow comes from mature industries. The mature industries can buy protection, and they do. And the new innovative companies that are coming, eventually they will win out. But it takes time, usually a generation. And for those 25 years, those at the top will do everything in their power to keep you from getting there. They want to do like everybody does, maintain market share, maintain profit margins. Who wouldn't? But we sit back and think that in the United States we will be protected from a totalitarian form of government by business. They'll join up with the Senate. They don't. They go with the totalitarians if they're at the top of the heap. And that usually comes as a surprise to most people. Okay, the E-mini is holding well. We said we might have to buy 70s last night. 70s were okay. We would love to buy 65, 67s. We just touched 67, the top of it, and here we find ourselves back at 72. So we have stops above 74 from yesterday. So we're going to make, again, we have economic news that can take us higher this morning. We're going to make sell 1, 74, 76. Sell 2, 79 to 81, but we'll have to adjust it after the retail sales numbers this morning. And it looks like they might come in stronger than forecast. On the buy side, we'll stay with 65, 67. And then 60, 62 for buy number 2. But stock market's holding in really well. We only had that 35-point correction from the top. And retail sales ex autos looking for plus 0.6. Empire Manufacturing Index 17.8. There could be some disappointment in this number because it's been carried at 13%, but it's going to be lost in the retail sales numbers. Then Yellen's testimony will be how the market prioritizes it, and I doubt if Yellen says anything different than she has been saying. Okay, it'll take about 15 minutes to get everything up and around and posted. I'm going to get busy on that. We've got news on the half hour. We'll be back. Should be back before that, and we'll get after it. In the meantime, good trading.